Welcome to the Market Recap, your weekly digest of the biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap on Friday, April 22nd. I'm, of course, joined by my wonderful co-host, Bruce Campbell with Stonecastle Investment Management. Thank you for joining me, Bruce.
Yeah, it's good to be here on Earth Day.
It is Earth Day, so do something good for the Earth today. Before we do that, we're going to talk about the markets, though. So there's a bunch to talk about. We missed last week. It was Easter. I hope everyone had a wonderful Easter weekend. We missed last week, and the big story of last week was Twitter. If you don't know what's going on with Elon and Twitter, go check it out. I wish we were talking about it this week because it was a great story. But there's lots more good stuff to talk about this week. We're going to talk about the Fed, potential BPS hike. We're going to talk about 10-year U.S. bond yields and what's happening there. I know that reflects a lot on the market. There was some tragic earnings reported from Netflix and what happened there. And then we're going to talk about some import issues, which is something that I think we've all felt over the past few years, but there's some big issues with stuff in import. And of course, we're going to talk about some CSE issuer news. This week, we're going to talk all cannabis. So let's jump right into it. What's going on with the Fed?
Yeah, I mean, they continue to talk interest rates up. This week, Jerome Powell was speaking at an IMF conference on monetary conference. And he basically said that, without explicitly saying it, but pretty close to it, that, the next rate hike in May is going to be 50 basis points. Some of the other Fed presidents are talking that it could be 75 basis points. So now the market has expectations that's going to be 50 basis point rate. So like half of 1%, as opposed to just their regular kind of what they normally do is 25 basis points or a quarter of 1%. And now that expectation for 50 basis points is over 98%. There's now a 2% 75 basis point hike. And the market's expectations for the hikes this year, 25 basis point hikes this year, is 9 now. So that's up from about 4 earlier this year. So rates continue to go get ratcheted up. The market's anticipating that they're going even higher. And when that happens, the market tends to sell off. And that's exactly what we saw really on yesterday and again today.
And I will probably continue to see this, right?
Well, certainly until we get some control of it, on inflation. So the inflationary numbers continue to be high. And each month in the last 3 or 4 that we've seen them report, they've been extremely high. We should start to see some moderation in those year-over-year inflation numbers because the comp from last year was very high. So if you look at the comps for May, June, July last year, they were extremely high. So we should start to see the numbers coming down from a year-over-year perspective. How much they drop, I mean, that's going to be the big thing. If they don't drop, then yeah, we probably can expect to see further interest rate hikes throughout the year. If they start to drop, then at that point in time, that's where the Fed has to balance things out because, again, what he said in that speech with the IMF was that, they're going to try to slow the economy, but not so much that it goes into recession. That's a real fine balancing act, especially when they're, lowering or increasing rates depending on what they're doing at the same time as the numbers are lagging. So, they keep increasing interest rates. Well, all of a sudden you go past that point of stall and it's like an airplane falling out of the sky, which could be the same thing with the economy. So they're going to try to balance that carefully, and they probably will slow down when they see the numbers start to slow down.
Yeah, let's hope not for that. Okay, what happened with bond yields? I know 10-year U.S. bond yields are kind of descriptive of a bunch of things in the market, right?
Yeah. So, I mean, if you go back a couple of weeks ago, everyone was talking about this 10-year, 2-year inversion where the 2-year rates were actually higher than the 10-year rates. And now we've seen that normalize as what we really have seen is we've seen the 10-year numbers go up. And when they talk about, neutral as far as where rates are, they're looking at that 10-year. And so the 10-year is now starting to approach that, getting close to that 3% level. And, if you remember, it was significantly lower than that not too long ago.
Yeah, no kidding. Okay, we'll watch that one for sure. Let's talk about Netflix. Netflix, we haven't talked about Netflix in a while. It had some very disappointing earnings this week. I believe they've lost, if the number is correct, about 200,000 users, which has definitely hurt their bottom dollar. What happened with Netflix and once they announced those earnings?
Yeah, so they announced those earnings. I believe it was Wednesday after the market closed, and the stock immediately sold off. I believe it was off like around 15% in the after hours trading. When it opened up the next day, it just went straight off a cliff, as you can see from the chart here. It was down, ended up being down 36% on the day, which is a significant drop for any stock. But when you think about the billions of dollars that were lost by investors who held their position in were holding a position in Netflix, it's hard to fathom how much money that equated to.
So that one day drop was actually $50 billion in market cap. And there's a famous investor, William Ackman. He actually ditched his $1.1 billion investment and took a $400 million loss. He just said it's too risky. So he took a huge loss, which is not good for them in the markets. That's for sure. What do you think is going to happen? Do you think they can recover from this when a company? I mean, we've talked about a lot of meme stocks, and we've talked about a lot of stocks that have had maybe that similar graph, but this is, completely reflective of their earning losses. So, can a company come back from this?
Well, certainly they can come back from it. That's possible. The challenge that they run into is there's a number of new streaming services that have been released in the market that are gaining traction as well. And so, when economies are strong and everything's booming, maybe you have 3 or 4 different streaming services, but when things are starting to slow down, you're getting pinched by interest rates, you're getting pinched at the gas pump, then you start to take a look around and say, well, do we need 3 streaming services? Maybe we only need 1. And so, does that Netflix, or if your kids are big Disney fans, do you keep Disney Plus? That's really where it starts to have an impact, and could be more of a headwind in the years to come for Netflix to gain back and continue to dominate the way they've been with so many other platforms now out there.
Well, I mean, I kind of feel the same way. I feel like after 2 years of being in a pandemic, we had every streaming service there was. And as we all start to go back to life, I feel like somebody was going to take that hit.
Yeah, exactly. I mean, that's another factor that I didn't even mention, right? Is, we were all sitting on our couch eating potato chips, and now we're actually out in the world.
We're back out in the world, hopefully, if all goes well. Okay, we're going to talk about shipping. This is an interesting one. So what happened? There's apparently a bunch of shipping containers that are not are sitting there full. What's going on?
Yeah, so everyone's sick of hearing about COVID, but COVID continues to be running rampant in much part of the world. But the Chinese, of course, have continued to take COVID very seriously and have the zero COVID policy. And as a result, they've locked down a lot of areas. One of those being and including Hong Kong, which is a huge port. And so right now, if you go to I believe it's Vessel Value, which is a tracker service that tracks vessels, they have a pictogram of effectively what we're seeing in Hong Kong. But allegedly around a third of the world's container ships are waiting to get into port in Hong Kong. And right now they're running short staff on the ports because of COVID. And so they're either not unloading those ships or not unloading them as fast. And there's this big log jam, which, ultimately what that's going to mean is, again, higher prices, because goods are going to be short supply because the supply chain isn't working as efficiently as it could be. And then that's going to create more hiccups, more challenges, and cause prices to increase until those supply chains get under control.
Well, I think everyone's experienced that at some point in the past 2 years, is that whatever your needs were, at some point we've experienced the fact that it just wasn't able to get to us because there's literally nobody there to unload, the shipping containers, or to load it, or to take the ship across the ocean. So that's terrifying. I mean, a third is huge. If you have ever been in Vancouver, you've probably witnessed the amount of shipping containers that we have kind of come into our port, and it's quite amazing how much is on every single shipping container.
Yeah, it sure is. Yeah, and you think that's a small port compared to what Hong Kong is.
Exactly. Yeah, no kidding. I actually looked up Hong Kong COVID rates just as we were talking about this. I decided to look it up, and it was interesting. If you look at it, the spike, it's almost as if they weren't reporting COVID cases until just recently. I mean, maybe it was the site I was looking at, but I thought it was interesting. They weren't reporting cases until very recently,
Hmm.
and there's a huge spike. So maybe there's a bit of an issue there. Okay, we're going to talk about CSE issuer news. I'm not going to talk about any issuers today, but what I am going to mention is the CSE's team is down at the Benzinga conference, which is in Miami. It's a huge conference. They travel all around the Benzinga conference, and it's a huge institution, or become a huge institution in the cannabis space. So we're going to talk about all things cannabis. There was some great news in the U.S. today. Cannabis sales started in New Jersey. What happened?
Yeah, so it was actually on Wednesday that cannabis sales started in New Jersey, and there's several.
Sorry, was Wednesday, April 20th, 420?
It was, yeah.
Okay.
There was several CSE issuers who are in that state and opened their first stores. I think 12 stores opened that day, and if you sort of go online and look, there was fairly significant lines to get into all of them, which is for the cannabis sector, that's great news.
Yeah, so they're estimating that in New Jersey alone, that the cannabis sector will reach $2 billion in sales, which is an estimated $123 million in tax revenue. I mean, this is huge. This is huge when it opens up in a jurisdiction, right? For tax revenue, for jobs, for I guess people to get marijuana. So it's a big deal when it happens.
Yeah, it sure is. And I mean, you think about New Jersey, they're the first of, sort of that 4-state area to legalize. So they'll probably get some traffic from some of the other states as well, because, it's a short car ride or train ride to get to those different areas.
Okay, so every time this happens, do we get closer to the US potentially switching over to federally legal? What do you think?
Well, we all, we manage a cannabis fund, so we always have our fingers crossed that that's going to be the case. It's the population certainly is in favor of it. More than half the population in the US lives in a state that has medical or recreational legal cannabis. And, it's over 70% of the population that's in favor of recreational and over 90% that's in favor of medical. It's hard to believe that, they continue to kick the can down the road. They don't even allow the safe banking, which of course is actually a public threat, because there's, dispensaries that are being held up because they only deal in cash. So every time the state like this converts over, we think, okay, well, hopefully that means the senators that are in charge of these bills, see what's happening and they'll vote in favor of it. But we certainly haven't seen that yet.
Well, and it's interesting because when I was reading up about New Jersey, what they were saying is the hope is to kind of convert people from the black market to the regulated market. But when you're expecting people to use cash, you're not facilitating that transition very easily. So hopefully that does happen for them at some point. Bruce, what should we think about going into next week?
Well, I mean, I guess the continued thought is going to be on interest rates and inflation and what impact that has on the markets. The markets are, they're fairly oversold again today here. And, we would expect that we probably see a bit of a bounce unless, the inflation numbers and the interest rate rhetoric continues to be high.
Sounds good. Well, listen, you have a wonderful weekend. It's sunny here in Vancouver. I hope it is in Kelowna, and I hope for our friends out in Toronto, it's nice weather out there as well. Have a wonderful weekend, Bruce.
Thanks. You too.